What's going on, traders? Hope everybody's having a great weekend. Wanted to do some analysis of the E-mini S&P futures, ES, as well as NQ, the NAS. We're going to go over the weekly charts and the daily charts, and of course break it down a little bit more granular and look at some hourly charts and levels for some potential day trade setups that I will be looking at for this week. We're going to go over the economic calendar first, of course, and get into any data points that we might want to be paying attention to this week. So let's get into that before we dig into the charts as well as some of the other data points that we like to look at each week together. Reminder that this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. So let's get into the economic calendar here for this week. Let's bring this up for us here. And Monday doesn't look like we have anything scheduled for us. Tuesday flash services PMI at 9:45. New home sales at 10 o'clock. Should not be too much of an issue there. Durable goods Wednesday 8:30. Not really worried about that. We will pay attention to GDP and initial jobless claims on Thursday the 25th though. See what those numbers are looking like. And then Friday to close out the week on the 26th, we have PCE data at 8:30. So let's pay attention to that as well. To close out the week. So looks like a really kind of a quiet week overall. Just a couple of things that we want to pay attention to, but no real major events that we need to pay attention to. Of course, the star of the show this week is going to be earnings for us, which we really are kicking off the season now. Banks are pretty much behind us, and Netflix is also come and gone. So this week we do have Tesla. Everybody's going to be watching that Tuesday after the close. GM and UPS on Tuesday before the market opens. Wednesday, though, we kick it off with Boeing in the morning, so definitely going to pay attention to that. And in the evening, after the market, we do have Meta, another big mover for the market. So all eyes will be on after hours for Meta. At Thursday, after the close, we've got Microsoft and Alphabet, another two major market movers. So definitely cognizant of those numbers and how the market reacts to them. We also have American Airlines and RCL reporting before the bell opens on Thursday. Not really market movers, but people do pay attention to them as well. Intel and Snap on Thursday after the close, and then Friday, not too much, just some of the oil names with Exxon and Chevron. So those are the major names. The rest of the calendar is up on my Twitter at _shark_trades, and you can find that on there, or you can just go to Earning Whispers Twitter pages where I get it anyway. So check out them and shout out to them for always posting all the great earnings information during season. All right, so let's go over the weekly now and see what we can take away from this perspective. We've been watching the this overbought condition for a while. We spoke about that these things take a little bit of time to play out, right? We just note the location of the readings. We don't make a trade just solely based off of one indicator or one data point. But we have finally started to see this rollover really take place in the markets, and now we are sitting right at the weekly 20 period moving average. So really at an interesting spot here for the markets, especially coming into earnings season. And unfortunately, we also have that geopolitical backdrop with the war going on with Iran, or the attacks going on, I should say, with Iran and Israel. So they never make it easy here in the markets, and a lot of these. What I'm going to be talking about today is really just going to be based on the price action, and we're going to try, obviously, the earnings reports are a canary in the coal mine, and the geopolitical stuff is a canary in the coal mine. So we're not going to be able to really take into account for those things. So all things being equal, really is what I'm kind of going to be aiming for here. With the markets and the price action. So, again, we'll have to keep these other backdrops in the back of our mind as we navigate this week. But either way, we'll do the best that we can, right? So let's kind of go over the weekly here. As I mentioned before, we're starting off with ES. We closed pretty much right on that weekly 20. Markets are open now with Globex, and it looks like ES is bouncing a little bit. It's up about 14 points, so that is a decent bounce. NASDAQ making a much better bounce here, up about 73 points now. From the close, and I was really, to be honest, hoping that we would not see this type of bounce quite so soon. Still plenty of opportunities for trades, but I'm really more in the camp of would I want to be a new short here after this rally down. For me, I'm more in the camp of we're gonna have to see a new lower high be put in the trend sequence before we're able to see another move down. So am I looking for a new money short? No, obviously the trend is down, so we are going to be looking at that direction overall. But do we want to be shorting here in the hole after what is this, 3 weeks red? No, chances are, and the odds are in the favor that we would see some type of a retracement back up over. And there's many things I really wanted to go over here. So in this video, and I think before I forget, the first thing that I kind of wanted to go over is what's really happening here, just from a broader market structural context, right? So we had this balance range that we were trading in, and we did mention a few times that we were paying attention to see if this was a possible distribution taking place right here, right? And we really wouldn't know that per se until one of the sides of the balance range broke, right? And that would really kind of, we're always letting price be our guide. That's the first and most foremost thing. So if we broken out to the high here, we had a plan for that. And if we broke below, we have a plan in place for that as well. Now, clearly, the decision has been made. This has started. This was in fact distribution. And now we've had the first phase of a markdown. Now, I am a fan of the Wyckoff, and we're really seeing this this Wyckoff cycle start to take that new turn right now in the market. So we had in the downside phase of this formula, or framework, I should say. We had our distribution. Now we have our markdown. So now what are we looking for from this perspective, right? We're waiting for the retest, and you can even make a case that on the daily it potentially happened here when we traded back up here in the early start of the week. But I would still think that we have the chance now for the markup phase to come in and I want to delete that. The markup phase to come in and bring us up for the counter trend move. Now, again, how far will we go? Well, we can look at, the weekly 9 here certainly could be a potential spot at basically 51.05. That could be an area where maybe even you can work into a short position with the starter. But there is a chance, I didn't mean to do that, sorry. But there is a chance, and what I would really much more prefer to see happen is us to come up and actually come and back test the balance range here, this distribution range, and then we make the move to the lower side, back down, right? So this a new money short here, getting in short, looking, thinking, oh, we're gonna break and come down lower, is just it's a fool's bet. That's, I think, what a new trader would come into the market to do. And so I want to be cognizant of that and rather position myself for the opposite way, and then look to possibly, go in for that or when we have a better risk to reward coming in our favor, right? And that's what trading's all about, and getting that good risk to reward. We make our, I'm a firm believer that we make our money on the entries more so than we do on the exits, right? And that's really, our entries is what is also going to save us and keep our risk tight. So we get that good, 2-to-1 risk to reward, 3-to-1, 5-to-1, so on and so forth. So this is what I'd be looking for. As I mentioned, we can possibly, and we're going to look at where the daily moving averages are, but from the pure price action perspective, this retest of this prior distribution balance is what I want to see, and where could we potentially go. So I'm going to mark this off here, and we do have this kind of drawn out a little bit already here on this drawing set that we have created from last week. And this again is noting that distribution broke down. So there is the opportunity also that we don't even make it all the way up into this prior balance, right? It's very possible that, and again, we have the earnings, so it's really hard to say, but it's very possible that we only come up into this kind of area here of this supply liquidity that now has been created. We also do have the strong possibility that because this is the first obvious short, and personally I think that they would be more likely to stop everybody out on this obvious short, and then we come in to retest this structure and then potentially break down. But again, I'm just guessing on this, and we'll let price be our guide. It's just a thought. They never make it easy, as I was saying before, right? But we have to consider that this could be the retracement that we get before we make that a next move down, if the trend sequence does continue to move, right? And this would be our more of a daily higher lower high, versus if we came back up and retested this prior distribution balance, that would be a weekly higher lower high being put in. So here's our two levels, and we'll look at the daily here in a moment. But where do I think we could potentially come into if we did start to head back down and create a newer lower low in the trend sequence overall? Well, I think that the glaring spot would be the highs of the prior balance right here in this area. Okay, so if I am looking for that short up here in the 5140s, potentially, if I do take a trade like that, and I get stopped out, I would be probably very likely to try again, if we came back up into here. So, that's just my own kind of thought and thinking. But where do I think we would come in and to make that new lower low? I think it would be down here, right? The top of this prior balance range, and that would take us down, and nothing's going to be to the penny, but we can look in this general area. Basically, 48.40, 48.15. Maybe we come a little bit lower than that. Let me bring it down. It's very possible we could see 48.10. That's only 5 more points. I would say anywhere from maybe 48.40 to 4800. So about a 40-point range there. I know that's maybe not. We're looking at a weekly here. Maybe that's not a pinpoint enough for you guys, but we will get obviously a little bit more granular on the daily chart. But I would say that I think that general zone of potential demand liquidity, it would be a reasonable first target and a spot that the price may go and be driven into. Now, one step at a time, but where could we possibly go if we break down below that? Well, it's we have our prior balance here, right? Which we already established. If that breaks, then the next downside target, and one step at a time, we would probably head down here into the 47, maybe 25, maybe 4,700 flat. So another 100 points down lower in the ES, only if we lose that 4,800, 4,810 zone. So that's what we're seeing. It won't be a straight drop, but we would slowly slowly make our way down into that area would be my next guess. So that's what I will be looking at for the market here. And let's start to go and peel into the daily time frame and see what we can take away from that perspective. I guess actually, you know what, before we come into the daily, let's go back to the weekly really quickly. I just wanted to bring another view to our, another perspective here as well that we can take a look at just from the fibs here. If we come from just this yearly's price action, and we come in, and we could also do this pretty much on the daily as well, but I think that this also kind of gives us a little bit of a nice view of where we are for the year overall. And we're sitting basically right at that 50% retracement of the yearly daily range. So I think that this is also a reasonable place to consider that counter trend move off the 50%. And if we're just going with the fib retracement theory, we could look at something like a move right here up into back test the 23 6 the 28 what am I talking about? The 38.2, and then reject from there, come up and do something like this, and then roll over, and then we make our lower low into the 618. So that's another way you can look at this and potentially trade it. You also can see here, this is that prior balance that we were talking about. So this would be the other area where from the weekly perspective we can look for that move down, target 1, target 2, target 3 for runners, and then we see if we hit that lower low all the way down. So those could be two paths that we may take. Obviously these areas would just be target zones. It's possible that on that short we come back up, retest, then we come back up. Nothing, we might go sideways for a bit and then come back up and end up doing something like that. But just another way to look at the market that I wanted to point out. So all right, let me remove this here. Let me come into what I wanted to look at were these bigger picture macro trends. Here we are, and see where we are from this view. Okay, so you can see here, this is where we broke down. Again, here's our consolidation, our distribution balance, broke down, come up. So we could also, another thing that we might want to watch for is a push back to retest, right, this trend line, and then we come back down here. Right, and these are a little bit harder to kind of gauge, where they're going to be because of the incline and the angle of attack on it. But we could look up anywhere. Let me see here, depending on the date range. Let's see. This is 50.75, 50.80, 50.90, and a little bit higher would be 5100 even. Okay, so that gives you maybe a little bit of some levels there that you could keep an eye on that we may attack, and it would just be basically retesting this trend line, and then we look for those equal lows and that potential break down to the lower low, and then that next retest up, and then we just continue our merry way. Okay, so we've gone over. Let's look at the daily chart now and see what we can take away from that view. Okay. Now, so here are some of those zones. Again, another viewpoint, and this is going over this top of this balance range here, the bottom here, which we've already kind of been over on the daily chart, excuse me, on the weekly, here is our breakdown of the balance range right here. And now, we're sitting again in the high of this area. It could be a little look below and fail here on the daily. We'll have to see now as another place that we could potentially just see that counter trend rally come into. And this one lines up pretty decently, again, with what we were just looking at on our bigger picture trend lines. Is the daily 9 is sitting basically at 5100. It's at 5090, just 10 points right below that. And of course, this probably will start to move down a little bit as well. But also, when we talk about this on the short side as well, kind of giving us a little bit of that thesis for the snapback counter trend rally that we may experience, is we always like to look at least I like to look at, I've been over this on the videos before, we've looked at it from the bullish side and from the bearish side, right? Time and space. Now look at how far, now obviously Globex is opened and we've opened right here, but if we go from the close of Friday's session to the distance between the 9, this again is extended, right? So we're going to see a little, or should see somewhat of that push back to kind of look to get a little bit more comfortable and a little bit more, because look at the trend. This is how we were trading before, right? We were riding. Price didn't ever really get too far away, and when it did, you can see here the space. That's when we see those snapbacks, right? And you can see it here as well. Okay, we want to see price really just riding. That's when it's healthy. When it gets too far away, that's when it gets a little healthy. And, it doesn't always work, obviously. But it's certainly something that we want to be paying attention to. And again, when we talk about that risk to reward, especially on a swing trade kind of, from the bigger picture perspective, we want to be positioned correctly and not being foolish and saying, okay, we're going to have to kind of have these catch up and get a little bit together so we see a little bit of a smoother ride. So, and look at the distance here also as well from this low from the 20. I mean, this is, very, very far here. So is it crazy to think that we see, those pushes back in and then maybe fail, or even to here and maybe fail? No, not at all, right? The other thing that I do want to point out here that also is another point of kind of supporting evidence for that counter trend rally is, we're looking at our overbought, oversold conditions here on our custom indicator. It kind of was giving us, of course, that inclination that a downtrend would start to develop on that weekly. But here we are on the daily now, oversold, oversold, readings in the dumpsters here. Where are we actually even showing the readings? Hold on, I can't even see. We're at negative 13, right? Okay, so pretty strong reading there to the downside. I have not, I don't see anything so far perking up, really giving us that show of any momentum yet. We'll see how this kind of closes on Monday. But if this starts to change color into the green and start to curl up, that's what I'm really going to want to see. We'll see, how Monday closes. But I think that seeing that would give us another encouraging point that we could see that counter trend rally maybe back up to the 0 line. Really wouldn't surprise me to see, come up back here and then roll back over, right? So let's see what we get. So another area is definitely still going to be paying attention to those potential short zones for the daily lower highs to be put in. And let me actually get this off and just come in blank here to look at it from the daily perspective. Right, so here is our balance range. I'm just going to do this really quickly so we can get into the other charts. Okay. So we've got our trend sequence here, obviously lower low here, lower low here, right? And we're just coming along. So is it we should be expecting, or at least from the trend price action theory, that the daily higher low could be putting in right around here. I don't think that this is crazy to think of this area right here being put in, and as it stands, really nice confluence with the daily 9 here. So, you know, we could end up seeing, oops, something like this. And then we come in, and then from there, you know what would be the likely thing. We come down, that first target is obviously that swing low, and then we look for the lower low from there. Right? Now that's a trade, right? We don't short here. You know, that's the sucker's bet. So this one, again, as I was mentioning before, the daily lower high, definitely a scenario that I will pay attention to and have to be cognizant of. I'm like, are they going to make it that easy? You know, I don't know. You know, I mean, I definitely think people probably did swing puts, you know, because, you know, newer traders and just people, the FOMO and all this kind of stuff, did still swing puts. I just think that they're not going to just, you know, let her take you out on that date. You know, they're going to make you work for it. I'm going to pay attention. Obviously, this is a logical spot to give it a shot. I'm more interested, as I mentioned, in the weekly lower high to be put in. And again, that would be really more close to the 20 here, or as close as we can get to the back test of the prior distribution. So that is all I've got for that. All right, let's go into the hourly here really quickly and break it down a bit more granular, and we'll get into some a day trading levels for us here, and how can we attack that. So let's go into let's do it on an hourly here. Okay. All right, so little gap up here. As we mentioned, the markets are up here at the Globex opening. And what we are going to be paying attention to is that Friday, where we go here. Let me zoom in. Okay, we had our... Okay, so we've got our low here that I want to pay attention to from Friday. So everything really depends on this for the bears right now. So we really start trading under, or if we open by some chance, if this gap closes. If we open up and we trading under 49.90, we look, then I would say bears have a chance to attack the lows from, I believe this was when we had some geopolitical issues overnight. I think this was Thursday. We would be more than likely looking to attack these equal lows right around that 49.30, what is this, 49.63 half. That would be my next target to the downside if in fact we start trading under Friday's low here. So, you know, we come up and then come down and make our way here, our first target, and then look for a break and another low to be put in there. And, you know, if they are able to take that out overall, oops, okay, let me just bring this down. I think that their next area that they're going to be targeting more than likely would be down around 49.40. You're going to pay attention to, and 41.90, 41.20. The other thing here, and I'm going to pull out actually some balance zones which we haven't looked at in a while. So let's actually just do that. So certainly pay attention to these levels here, but let's do this from the balance perspective since it's been a while. Okay, here we are. All right, so for the bulls, as long as we hold, basically, I'm going to give it 50.05. As long as we, and the most ideal thing is if we open above 50, 50.10. We open up above this. I think that this, and we kind of build a base. We could even dip down into here. This is what also we could see happen. So I'm wondering, just as a very, very loose thought, you know, maybe this rally holds, maybe it doesn't. Maybe we open up down here. We actually see a move down like this, a recapture, and then a move up higher. That is something I will be watching out for at the open on Monday. But all things being equal, as long as we open up here above 50, 50.10, I'm going to be looking for moves into 50.30 here around this half gap. Certainly I want to pay attention to the hourly 20 here at 24 half. I think getting over that is going to definitely give us the clear path into 50, 35, 50, 34 there about. So I'd pay attention to that. If we start to get over and start to see acceptance, 30-minute hourly acceptance over 50.35, then I'm going to be looking for price to trade back into the highs of this balance, maybe to look for to retest the Friday highs. This would be the next area I'm going to pay attention to, up around 50.60, 50.64, 65, up in this area. Potential short zone though up in here. We could see a rally back down into the 30s, maybe the 50s from there. So I would pay attention to that. If you are bearish, one of the intraday short trades certainly you could take a look at is trading against the 50.35 there, looking for back down into the 10. And you know, if you're lucky, back down to 04. They start breaking under 04. 5,000 is going to be the target for the bears on that trade. Okay, but what happens if we open up bearish? If we open up and the market's looking weak, hesitant, I still probably would favor, again, the long side coming out of this. However, again, if we open up down here and we're holding, and market sentiment and breadth is also supporting it, if we see other of the core names down lower, I might look to stay to look for a short as long as we stay under the 510. You know, ideally, if we opened up here, we would see a push up into the 510 area, possibly hit the short, and maybe do something like this. And then we would again be seeking half gap here at 49. We'll call it 49.70, 49.73 area. That gives up. We'll attack the these equal lows here down around 49.36 as we kind of discussed a little bit earlier. So that's what I'll be paying attention to on ES. All right, we are over and done with the E-mini SMPs. Let's get into the NQ now really quickly and start to go and look at that from the weekly point of view. All right, so let's throw this up. What's going on here? Oh, and guys, I hope you're appreciating the new audio. Let me know if it sounds any better. I did finally order and get that new mic stand, so we've got the setup back up and running. And why is NQ giving us why is Thinkorswim giving us an issue now? Ugh, this happened in one of our other videos. Oh, okay. Yay, beautiful. All right. Okay, well, since they're just going to open us up on the weekly uptrends, why don't we just start here? All right, I like to just go over from the price action perspective first. Okay, here we are. Boom. All right, same song and dance here for the Nazi. We had this weekly overbought conditions finally paying out here for the bears, and we have the same distribution area here, right? It's definitely a bit clearer on the weekly. The daily is a bit more chopped up. But here we go. Here's our distribution. We've broken down. Okay, so now the NASDAQ is below that weekly. So the NAS is definitely a little bit showing a little bit more weakness overall. Goes, if you were trading on Friday, or if you looked over the markets on Friday, you saw Nvidia had a very bad day down. I think SMH is down about 11% or so over this week. So the semiconductors really weighing on tech pretty heavily. And that's why we're seeing this bit of divergence here on between ES and the NAS being under the weekly 20. This definitely causes a little bit more concern or issues on that counter trend rally potentiality here for the tech sector, because what might end up happening, of course, is that we just come up here to the basically, and it's still 200 points, 200, what is it about? Yeah, about a 200 point rally. It's sitting, the 20 sitting at 14,460 half. So, obviously that's going to change, but that's still a 200 point rally in the opposite direction, and really then going to set us up potentially for a weekly bear flag for the pattern traders. We start to see a little push up here, right? We just see some consolidation like this, right? And then what do we get? And then eventually we come down and break, right? The other thing structurally from the difference that we're seeing here in the NAS versus the ES is that we already started peaking into the top of this distribution, right? Or this prior balance zone, right? Which was really the target that we were looking for on ES to come into. So it looks like tech's leading the way and potentially ES to follow, considering we are already here, as you can see down here. So we've got this big balance zone, this potential demand liquidity sitting right here, and we are looking at the weekly chart, so it's going to be a bit of a wider range for us. But just as a kind of a thought, that's going to bring us down basically 20 points away from 1700 being the bottom. Okay, just going off the whole number, and then we've got 17,200 basically. It probably is 17,200 I can go with, and it might even actually be a little bit higher coming in from the low of the weekly candle of the 29th, which was 17,221 half. So just about in that zone. Can bring it up a little bit higher there if you want. So again, this is also showing us, do we want to be pushing in a new money short here? No, not really. Not good risk to reward. This pushing up to here or to the 9 would be a much, much better scenario for that short trade if you're trying to swing anything or to catch on this trend overall that has been developing on the daily and the weekly charts. But we definitely are in a weekly downtrend now. So that has happened with the new weekly low. They needed to hold on the NAS. They really needed to hold these lows right around the 550 area. They needed to hold that, for that new weekly lower low not to be put in, or the weekly lower low to be put in, but that's what we got. So it's not crazy again to think of that daily higher low, the weekly higher low being the next thing that we want to look for. And you don't even need to capture it. I think that this is another thing worth mentioning. It's not our job, to go ahead and I want to catch the market up for this rally higher, then I want to short it back down. Pick a side if and it just depends on your patience, right? You will be rewarded for patience at the end of the day. Obviously, the trend is down. So if you just want to sit on your hands and, open up a swing position and wait for that daily lower high to be put in or the weekly lower high, then be my guest, and I encourage that versus trying to ping pong and capture every move in the market, especially if you're a newer trader, right? That definitely timing the market is one of the harder things, if not the hardest thing to do. So to think that you can get the high and then the low perfectly, might be a bit of wishful thinking. But we have to be aware of the trend sequence and what is the more likely or probable thing to happen in the market. And even if we don't participate in the counter trend rally, if there is one, that we just have to be aware of that potentiality. So okay, so I think that it's actually interesting here that the daily moving averages pretty much line up with where the daily and weekly lower high would be on the NAS, right? Coming into about 17,700, 17,695, anywhere in that area is going to be basically the daily higher, the daily lower high to be put in. So I can mark that off right around in this area here, right? We see the counter trend rally up here, and then we come down to maybe make a new low, maybe then come up, and then we just continue on our merry way. The weekly scenario would be the retest of the balance range, and that lines up with the 20 as it stands. This is going to move, obviously, later in the week, but as it stands, 17,965. So you could just call it maybe 17,970. But if you want to come into the low of the balance range, let's just get that number it would be basically 1,800. So there's definitely some areas there that you want to pay attention to if we actually really get moving, right? Because I'm just thinking that this is the obvious short, and maybe that is the short that plays out. But would it be more likely of the market just to rip face and get everyone out of this obvious short and then bring it up into the one where they've already been stopped out, and then we go ahead and go where they all wanted to in the first place? Yeah, that's definitely a scenario, right? Going to pay attention to the weekly 200 here, SMA, and the next area for the bears, if they do really start to break under and get under that 1700. Let's zoom out here. The next big zone, and is where I personally think, and I don't know how long it's going to take us to get here, and we'll take it one step at a time, but the next big area that I'm going to be watching, if we break down under 1700, it's going to be down basically 16,500. It's really ultimately my short target here on the NAS. And again, that's just if the trend sequence starts to develop, but I think this is going to be pretty much the end of the road for the bears if we get here. My short target, I'm going to call it here now, basically 16,500. Thereabouts, give or take, 10, 15, 20, well, maybe not 10, give or take, we'll give myself maybe 40, 50 points off of that area. So I think that these summer highs are going to be tested, and right here, these highs as well, only if we break under here, and really lines us up perfectly with that weekly, with that daily 200. And then from there, we'll see what we can do. All right, but we'll have to start singing a different tune, of course, if the bears start to lose some steam. We start seeing some daily closes on here. Yes, I'm going to still look at shorts up until, unless we get back over this 1,800. If we get back over 1,800 and we hold, all right, then I'll start to sing another tune. And we can start talking about all-time highs, or at least retesting them again. But until then, structurally, we're going to have to stick on the team bear for now. And more of a short the pop market is the regime. We are watching, though, these overbought readings and conditions here on the daily, just like on ES though. So we could see that, again, another supporting kind of some evidence for that potential counter trend rally that we can see in the markets overall. And but I will say that considering that ES is sitting on the weekly 20 still, and that the NQ is below, if you are looking to participate in the counter trend move, you might want to go a little bit more where towards the strength is, and I think that that would lead me more to be long for a little bit on SPY versus QQQ. So just something to consider there as well. All right, let's break down the NAS here from the hourly perspective and see what we can take a look at from that view. Oh, okay, I did want to go over this too, the weekly uptrends that we originally were looking at. Nice confluence here. Of course, this is going to move, but if we do see that counter trend rally to put in the daily lower, the daily higher, lower high, look at the back test potentiality here with the confluence, daily 9, come up, hit the 9, boom, down, equal lows, and then we see if we can't break this trend line. And then again, ultimately, we'll sit and try to target that 200, sitting around that 16,760 area, 50 maybe. So we'll see, but that's a possible path as well. All right, let's get into, okay, here we can do it on here. And the balance ranges for this one don't really work quite as well because the NAS is so crazy. Nah, let's just do it. Let's just do it our other way. Okay. Here we are. All right, so I'm going to definitely be paying attention to, again, the weekly swing low, which is right here. Basically, 17,100. If 17,100 breaks, we can get back into bear mode. As long as that holds, I'm going to still try to be working some of those longs. Of course, we are 250 points up above that low. So I think as a better frame of reference overall, I'm going to mark off the high here. This is what I'm going to be watching at, right? This structure right now is going, and of course we gapped up, but this structure, this high of, what is this, the hourly, 30-minute hourly, what time is this? 3 o'clock. That high is what I'm going to be looking at and trading off of. I will also pay attention just to the low here, so I can do that. All right. Okay. So hourly high here. I'm going to pretty much stay bullish as long as, or at least look for a counter trend move, as long as 195, 17,200. As long as that holds, the bulls still have a structural chance. Ideally, we open up down here. Maybe if this fades, we open up down here and then we can catch a nice long here. They're right now selling off the hourly 20 or the hourly 9, I should say. But so that's what I'll be looking at. That's the structure I'm going to want to hold overall. You could say last saving grace is going to be this low. From this was when the war stuff was happening on Thursday night. So the low of that candle, 17,181 3/4. Anything really under that, definitely game over. and then we'll be looking for trades back down. I would say 58 would make sense to me, and then seeing about attacking 3130 area, 13130 I think is the next target. We get under that, and then we will attack the prior lows down here at 1711 17, what is this, 313 quarter. Okay, so those are the bear levels that I will be looking for if in fact we start to really break under 17,181. But I ideally would like to see the bulls hold 17,118, 17,195 half. That would be good. I welcome any pullback up into there is fine. For me, let's see. Obviously, we'll see what happens when we open up in Globex, but as it stands, I will be watching that. Okay, so let's actually bring this. Boom. Now this is what we're going to want to look for on the daily on both NAS and NQ. I mean, it didn't really get that sold off. This was just a reading. What was this? Negative 11. Wasn't negative 13, but we want to see it turn green and turn up like that. Okay, so definitely what we want to see happen here, and I think that where are the Fridays? Okay, here we are. Okay, we've been over the bear case here, some levels, some areas of support, and where we could trade down into. I guess I will say that if we break the 17,110, 17,100 probably would be pretty close coming after that. And if we did break under that, hold on one second, I just wanted to finish out for the bears a little bit. If we did get under that 17,100, 1775, basically 1780 would probably be my next level to the downside, and under that looks like 17. I'm just looking at a different chart here on another screen. 1740, 35 area would be my next downside target there. Okay, so for the bulls, though, if we really start accepting over 17,275, I think we've got a chance to come up, retest these value area lows here around the 1735 area. This is going to be big here. You can see we've had some reactions here on price before, so this is a major pivot. If you're not interested, if you really want to hold off on longs and you're looking for more of a confirmation long, I think recapturing 17,300 would be a bit better overall for that long trade into the 400s, maybe 410. If we are able to get over that 450, 465 area would be my next area. We get over that, I think it wouldn't be hard to go ahead and retest Friday's highs, or the pre-market high in Friday. Of course, we're going to look at the 17,500, but this would be the next, kind of ultimate target zone, anywhere kind of up in here. And to see. So I don't know how much of Friday's range gets, whoops, damn it. I don't know how much of Friday's range gets retraced. We could also just look at it from, let's do it from this. Let's break out, do it from a fib perspective as well. So here's the 40, 17, 340 would be about a 50% retracement. So we could look to see with that would only happen accepting over 17,300 is what would need to take place. Accept that, and then we'll go for those value area lows like I was mentioning before. It lines up here with the 50% halfback retracement. It's possible, and this would be kind of the most bearish thing, if we saw the retracement up, but then we stopped here and we just end up trading down here like this. This is just going to set us up in a bear flag. We're in the lower part of Friday's range. This would be the most bearish scenario. I would feel a bit better if we got over and we closed in the upper 50% quadrant of Friday's range. This would make me feel a little bit better, and then I would start to look at, okay, well, where are some of those Thursday lows, where are some of those other levels that we can start to look at as far as retracements are concerned. But I think that this is a good blueprint, at least for tomorrow. I would be very surprised if we did break over Friday's highs, but I think that these zones here would be pretty useful for at least Monday. And I think that again, as I mentioned, closing over that 50% in the higher 50% range, we have better chance for that counter trend rally really to take place. Of course, we're still going to have to get over the last week's pre-market high and the Friday open, that weekly low. But if we close underneath, then I would say that's going to be the most bearish sign that we could see. And even if we just over the 50% range would be like a glimmer of hope for me. But really, we're going to have to take out the 830 high, right? Because this is going to get us back inside last week's range, right? And so that, yes, technically we are inside last range, but that's going to get us a little bit more firmly over last week's range. I'm going to feel a lot better about that here. But at least we didn't open on a gap down outside of last week's range. So we'll monitor that poor low very, very carefully. Okay, so let's get into some of our other data points that I like to look over. We are flying on with time here, so I'm going to, I think I'm going to skip the dollar. Maybe I'll just fly through it really quickly. Oh, my back is killing me. We'll skip TNX, but we'll keep it on the dollar really quick. And we'll just look at it here. Same song and dance, really. I would still be kind of long the dollar. I would long, if I was looking for a trade on the dollar, as long as the dollar holds 105.50, I'd actually was looking for a trade. If we come down into the dollar, I might go long on it at this area here. If we break below 87, we'll probably trade down into that area. If we break the 50, just look for another 50 cents down into 105. Hard to get bearish, really, overall, bigger picture. These are just kind of, those hourly levels, 30-minute levels. But, as long as we're over 105, the dollar is still bullish. There's really nothing, no two ends about it. What does it look like on the daily? We are a little bit... getting a little bit in that overbought territory, but this just looks like a bull flag that we're just setting up on here, just high and tight. So if this breaks, we break that the high of the 16th. My next target, as long as ideally if you're bullish on the dollar, that 105.85 to hold. But still even could come into 105.50. As long as that holds, ultimately, probably that 107 is going to be on the table. But, we've had a big move here. So it's possible the dollar just consolidates or maybe even cools down a little bit. And if it cools down, if we actually do see this move, maybe that could support a counter trend rally. We see the dollar come back down to 105.50. I don't know if it makes it to 105, but that could be also what would make sense too. To cool off from here, retest this prior big major breakout. So maybe we kind of drift down, counter trend to rally, counter trend rally, counter trend rally. We come into 105 on the dollar. This signifies our either daily or weekly lower lower high being put in, and then the dollar goes, and then the market goes, let's see if that plays out. All right, I'm not spending any much more time here. Okay, let's get into some of our internals and then close it out. We're going on an hour. I appreciate everybody sticking around with me. All right, here we are. Oh, gosh. Okay, let's look at how many stocks are trading above their 50-period moving average and 200-period moving average in the SPX, respectively. Right in the 29% here, big area, 29%. Want to watch this? What I am going to pay attention to. Same thing with the dollar. Can we get this? Retrace to 50% reading. Then we come back down. Maybe we do a little bounce. Maybe we make a low like that. It's possible we come down back to this, the 0 line. From there, this is maybe when we hit that those summer highs on ES to the downside, and then from there we make the push back up. Let's see. Counter trend to 50%, down equal lows, down to 0, back up. Maybe we don't even get that far to 0 though. That's very possible. Maybe we just come down to 17%. We are still in a election cycle as well. So the 20, let's see, same kind of idea. This one's going to be slower to react, so I don't know if we're going to be able to get all the way to 50, all the way to 75%, but maybe we could see this. Then we come to 50 here, and then that 50 is basically going to line up with the 0 on the 50% reading here on the 200 will line up with the 0% here on the how many stocks are trading over their 50-day. And then from there, we rally. From here, we rally. But as long as it's under 65%, not a good look. I'll pay attention to readings. Let's hold it above 6. I think we have that evidence for the counter trend as long as we stay over 66% of the stocks trading. We'll give it 65% of stocks trading over their 200-period moving average. And kind of already kind of bouncing here. This actually looks a bit constructive, right? We've got our low, low, higher low. This was our higher high, a new higher high. So I like that. I like that as a little counter trend evidence, potential support. Let's go into the VIX here. Take a look at what's going on as far as volatility and the put-call ratio. Put-call ratio got a bit off sides here, I think, and now they have offloaded some of their puts. Now we've come down. Still a bit elevated over the 1% reading. What are we at? 95, basically. Still elevated, but not in a contrarian signal. If we get back up into here, I'd be looking more for long. So let's see if we do kind of see these readings up here, and if they line up with my downside targets, I'm going long, hardcore at that point. VIX a little bit better in the sense that here we kind of did what looking like a potential fake break, right? Pushed above 20, couldn't hold, back under, just closed slightly under 19. I think as long as we stay under 20 now, 19, we could look for something like this and then have it cool off a little bit. Do we come all the way down? I'm going to be watching 16 basically, a retest from here. So maybe we cool off. Counter trend rally, counter trend rally, counter trend rally, bounce from here, and then we get our, when we come down into this area would be either that daily or weekly lower high, and then that's when you look for the short, and that's when this goes back up to 1920. Does it get over 20? I don't know. we could just roll from there. Maybe we come up higher. Maybe we actually come in and tack these again. That's possible. If we get over 20 and hold. All right. Let's go on and on. What other else did I want to go? Let's look at the VIX futures here. Did it keep? Oh, good. It kept. Cool. Okay, VVIX. Wasn't able to hold over 105, 103. I like that. I don't like it holding over what is this? 86.25. No, 96.25. Want it under that. If we can get under that, we could cool off a little bit, support that counter trend rally thesis. Let's see if we can get a reading down into the 90 area. But as long as it's under 96.25, this looks a little suspicious to me. I don't want to see it over 103, 105. If we do, then more volatility and more downside. Monthly versus 9-day, still elevated. Obviously above the zero line. That shouldn't be a surprise. We are above the zero line here on our VIX futures, so we are no longer in the backwardation, and we're no longer in contango. Now we are in the backwardation. More risk being priced into the futures market, and more volatility being expected. Bulls want to see this back below zero. And until that happens, it's a little tough. So I think, though, that these also could be pricing in some of that geopolitical stuff as well. So that's also possible. The other thing I wanted to go over, looking at the bonds here, HYG, and this is another data point that I think is signaling a little bit of that potential thought for a possible counter trend rally. You can see here, and we are coming into, we didn't look at SPY today, obviously this one's on futures, but same thing goes for SPY, those overbought readings here, oversold readings coming into a major trend line. Nice spot there for SPY to possibly do something like this, and then but let's see. But here's another supporting evidence for the potential of a counter trend. Look at the divergence here in the bonds moving up, right? So one canary in the coal mine. You would think SPY closing down like this would be down as well, but it's not. So divergence here taking place. Interesting. I like that for a sign that we could see a bit of that counter trend rally. So I like that. All right. I think that's everything that I wanted to go over in today's video. Again, I really appreciate y'all hanging out with me. Remember what we always say, a prepared trader is a profitable trader. So let's plan our trades. Let's trade our plan. Let's have a great week. Again, I mentioned it last week. I'm still dealing with it a bit myself. It always takes a little bit of transitioning going from the lower VIX to the higher VIX. Make sure you adjust your stops, your position sizing with the elevated VIX. You can't trade the same way that you did with a lower VIX. So just be cognizant of the wider ranges that we will continue to experience as we navigate the market. But again, if this is your first time listening to the video or watching and you enjoyed the content, don't forget to subscribe to the channel, turn on those notifications. For all my loyal subscribers and followers, thank you so much for joining me in this video. I really appreciate it. We're getting close to the 1,000 marker. I think what I'm going to do is either give away some one-on-ones with me, or I'm going to give you access to trade futures with me. I haven't decided what I'm going to give away. A couple of spots, maybe definitely for whoever the 1,000th follower is, but maybe I'll do like five prizes for whoever's, $9.95, $96, $97, so on. So that's something I'm thinking about. We're not quite there yet. I think last time I checked, we're at $9.40, $9.32. I'd have to look, but something that's in the back of my mind. Will definitely probably give something away as we get closer to that 1,000 mark as a big thank you and appreciation. So have a great rest of your weekend. Take care. I will see everybody on Monday. Let's have a great trading week and stay safe. Take care.